Today is Tuesday, December 8th, and this is a post-market review for the stock market activities today. We have a lot on the agenda today. Important coverage in the futures market. I have a trade idea there. The options market analysis. Plenty of trades. The headlines of the day. Important new indicators about market sentiment. What about charts? I got the usual. SPY, Qs, IWM, VIX, TNX, TLT, Dollar Index, Gold, Apple, and Tesla. In addition, this time around, we will do a full evaluation of the XRT, the retail ETF. This thing has been on a tear, and to answer the question, is it time to fade the XRT? We have to dig deeper and look into the components of the ETFs. So we're gonna look at Macy's, GameStop, Kohl's, Stitch Fix, Carvana, Etsy, and more. And lastly, we'll finish with answering some of the viewers' questions. With that being said, here we go. The Dow Industrial Average closing in the green, 104.09 points, or a gain of 0.35%. The Nasdaq closing in the green by 62.83 points, or half a percentage points, that is, to the upside. The S&P 500 also in the green by 10.29 points, or a gain of 0.28%. And here is the sector's performance for the day. At number 1, for the gold medal, healthcare. Number 2, for the silver, consumer cyclicals. Number 3, for the bronze, industrials. The laggards of the day, utilities, financials, and real estate. What's going on in the futures market? Here we go. Crude, muted for the day, slightly in the red for the WTI. What about softs? Declines for cocoa, cotton, and sugar. However, we see OJ and lumber outperforming significantly, up over 3% for the day. Coffee, muted, not moving at all. What's going on with metals? Gold, another green day. However, silver closing in the red. You start to read the tape here. Is gold about to hit a resistance and start to trend lower? Silver is predicting that. So when I look at the action in the futures market today, I'm thinking I should be trimming my gold position, taking some profits off the table. Platinum closing in the red, down over 1%. So did palladium. Copper also closing in the red by about half a percentage point or so. What's going on in meats? Muted day for live cattle and feeder cattle. However, lean hogs closing in the green by about a percentage point or so. Another bad day for grains. Soybeans down, soybean meal down, soybean oil down, corn, wheat, canola, all closing in the red. What's working today? My favorite, oats. I am bullish on oats, and here is the reason. The headline reads, North America's top performing food producer bets on oat milk. You're starting to see the phenomena of oat milk replacing soy milk, rice milk, and other dairy substitutes. And I can tell you from personal experience that oat milk tastes good, it is nutritious, and it is a perfect substitute for dairy. Now, what do you do if you cannot invest in futures and you prefer to invest in stocks? Here is the ticker for you and the name SunOpta, one of the best performing stocks for the year so far. So I'll be looking at this stock and buying it on the dip. Moving on to the big casino, the options market. What's going on here? The most active names for the day. Number 1, Tesla. The squeeze continues with over 1.2 million contracts traded for the day. About 69% of those were calls. Apple at number 2. Over 1.1 million contracts exchange hands today, and 77% of those were calls. Pfizer at number 3, 860,000 contracts. Check out this number. About 91.5% of those were calls. More gifts for the Pfizer board from the Robin Hoodites and the options gamblers. They're going to push this name higher. Executives are going to dump, and that's the story of 2020. And we see Palantir and Neo remain hot names in the options market, but we saw notable activities here for Ford Motors. Over 400,000 contracts today, 94% of those were calls. somebody is sniffing something here in Ford Motors. Moving on to the interesting trades of the day. Right away, we see that Stitch Fix popped higher today, and now it becomes a favorite gambling name in the options market. We'll ignore these trades. They have absolute no value. But check out this name, Nikola, making a comeback. And they're buying the 23.5 calls, expiration date next week, December 18th, with expectation that the name will rally over 24% by then. We know that the criminal chairman, former chairman of the company, Trevor Milton, liquidated millions of dollars worth of shares, and he's buying properties and having a good time. Shouldn't the son of a bitch be in jail? Yes, he should. But again, if you're rich in America, you can get away with a variety of crimes. Check out this trade, very notable one for the IWM. The IWM goes up on autopilot every single day. It is absurd, it is ridiculous, it's getting very extended. And every time the IWM rallies impulsively higher, every day we're now moving from the pause scenario and the dip scenario and the mini sell-off scenario into a shock scenario where you're gonna wake up and you're gonna see the IWM gapping lower and it's gonna flush down from there. The higher and more impulsive the rally goes, the more severe the correction will be. And in this case, the trader is buying the 181 puts, expiration date January 15th, with expectation that the IWM will decline over 5% by then. And this is a very expensive trade, costing the trader almost $7 million. Remember, we saw a bearish bet against the SPY worth over $15 million a few days ago. Now we're seeing another one against the IWM. They're all expecting a massive pullback starting next year. Here is a notable one for American Airlines, the ticker AAL, and they're buying the 16.5 puts, expiration date next week, December 18th, with expectation that the name will decline over 6.5% by then. Again, this is an expensive trade as well, costing over $500,000. Here's another one for Microsoft. Remember, we've been talking about Microsoft yesterday, that the name has been muted, dormant, doing nothing, meaning that options are really cheap for Microsoft. Here is somebody taking advantage of that, buying the 230 calls, expiration date January 22nd, with expectation that Microsoft will climb over 6.5% by then, and they're paying over $3 million for this one alone. And we're seeing the squeeze continue for Fastly, the ticker FSLY. They're buying the 110 calls, expiration date this Friday. This is the insanity. Expectation that the name will rally over 12% by then. And they are paying over $1 million for this one alone. Here is a quite unusual one for Oracle, the ticker ORCL. You seldom see Oracle in the options market activities, but here it is, buying the 56 puts, expiration date New Year's Eve, with expectation that the name will decline over 5% by then. This is an expensive one too, costing a little over $500,000. What about Uber? Here's a wild trade, and I agree that Uber will pull back, but this is too early and too speculative for my taste. But here it is, they're buying the 49 puts, expiration date this upcoming Friday, with expectation that Uber will decline over 7.5% by then. Now, why is this trade notable? We have the DoorDash IPO. The assumption from the trader here is money will come out of Uber into DoorDash. And here is the last one at the bottom of the table for Moderna. And this is why I keep saying, do not try to short Moderna right now, because you could get hurt. The maniacs are going all in, creating massive gamma squeezes in this name. In this case, they're buying the 190 calls, expiration date this upcoming Friday. And again, they're paying over $1 million for this trade alone. For this trade to be profitable, Moderna needs to climb another 12% or so, more than 12% by Friday. And remember, option sellers and banks in this case have been accumulating shares of Moderna, and they keep selling upside calls, expecting that they will expire worthless. They make money from the stocks ride higher and from selling the options, which in this case, there is a great likelihood they will expire worthless. At some point, I'm going to make a video teaching you how to think like a banker when you trade options, how to be in the other seat. Remember, over 90% of options expire worthless. So if you are in the retail side and gambling on options, buying naked calls, naked puts here and there, you got 90% chance you're gonna lose your money. However, if you're on the other seat, the other side of the table, the banker's side, you got over 90% chance or so of all of your trades becoming profitable. That would be another video under the series How to Become a Better Options Trader. Moving on to the headlines that shaped the day, and right away in the morning we heard about small business in America. What's going on? Small business optimism ticking down significantly in November. We were starting to see a recovery, almost a V-shaped recovery. Now it's getting worse. No stimulus, more shutdowns, and you see that small business owners are less optimistic about the future than they were in September. And also in the morning, we heard the news that Tesla will raise over $5 million by dumping shares on the heads of the Robin Hoodies. What did the Robin Hoodies do? They ate it and they bought the shares right away. Tesla management are being very smart right here. They know the stock is very, very elevated, and in case of a correction, they might not see this valuation ever again. So it is a chance for the company to raise as much cash as they can to stay ahead of the competition. Smart move from Tesla management, dumb move from the Tesla culties who continue to chase the name higher and higher. And speaking of the Robinhood, here we go. Robinhood Markets Inc. selects Goldman Sachs Group. Who else? To lead initial public offering at a valuation of more than $20 billion. Why not? Robinhood has the data. They know the insanity of the options gambling boom in 2020. They're starting to take advantage of that by IPOing the company at an insane valuation to raise a lot of cash. This is the golden time for companies to IPO. You see DoorDash increasing the IPO price offering. Airbnb will follow through. You're going to see that price range increasing once again. Why not? As long as the zombies waiting to stampede, you raise and jack up the price as much as you can so corporate executives and insiders can dump and become filthy rich right away. It's ironic that it's called Robinhood because it's supposed to transfer the wealth from the rich to the poor. What it's doing is transferring the wealth from the poor to the rich. Once this party's over of 2020, you're going to realize that all what happened in 2020 is just the largest transfer of wealth from the poor to the rich. Moving on to Boeing. We heard some bad news for Boeing here. More cancellation for the 737 MAX, aka the flying coffin. By the way, traders keep asking me, is Boeing a buy? It is, but you gotta have a very long-term horizon because it will take this company a lot of time to take off once again. What about Cisco? Cisco's upgrading its WebEx conferencing service with new features to beat back challenges from Zoom video. Congratulations, Cisco. You're about 9 months late. Now you're thinking about upgrading the platform after Zoom kicked your ass. Jabs, uppercuts, hooks, and now you're thinking about fighting back. Genius management right there. And what about the iMob? What are they doing? You know, people called them out on their bad practices of shaking down app developers, cracking their kneecaps, demanding more payment. So now they go back to the same old book of milking their existing customers for more cash, selling you new garbage, overpriced accessories. In this case, here it is, the new AirPods Max over-ear headphones, and the price tag is $549. Of course, I'm assuming all these people waiting on food lines will stampede to splurge and buy these headphones. And by the way, disclaimer, the speakers and the headphones, those are sold separately for $399. Oh, and by the way, if you're upset that the iMob is not innovating anymore, rest assured, we got good news for you. Apple is releasing the newest innovation, the most stunning 21st century innovation that have never been seen before. Are you ready for it? Here it is, the Fitness Plus service. What is that? Fitness classes online. Wow. I think that is worth another $1 trillion to Apple's valuation because this new innovation that I never thought would be possible, you gotta give Apple a premium for that. Except, of course, that Jane Fonda invented fitness classes back in the 80s. How come Jane Fonda is not worth $2 trillion? Oh, and by the way, I love Jane Fonda, and I don't care what you say, boomer. Moving on. to the stimulus fiasco, and what a circus this was today. Right away, we heard that the direct payments to households, the $1,200, is off the table but could resurface in the discussions. And here comes Nancy, the working class hero. Remember, Nancy went on CNN and she was upset that the anchor challenged her and she went Marie Antoinette on him and she said, oh, we feed them. We feed all these poor people. Who's we? Who's we? You're not the queen of America, baby. You're an elected official. Do your goddamn job. You are not entitled to the office. But here she is. Nancy says that she supports putting the $1,200 checks into the next COVID-19 bill. Not this one, but the one where the Democrats are going to roll the dice, assuming that they're going to win in the Senate races in Georgia, and they're going to do it in the next bill. This stimulus was never about you and me, was never about the poor and working class. This was about bailing out states and big corporations. That is it. And as the day progressed, we heard more. U.S. House Speaker Pelosi, bipartisan negotiations on coronavirus aid bill have made good progress. And then accuses McConnell of obstruction. So wait a minute, did it do good progress? Or are you fighting with McConnell again? And here is the latest. McConnell calls to abandon liability protections. Remember, this was the sticky issue. The state and localities funding and the liabilities. They're not even considering the $1,200 checks. That is not on their top priorities. But McConnell is compromising here, it sounds like. However, this is unlikely to work because Chuck Schumer says that McConnell is pulling the rug out from under firefighters, police officers, and other local government employees. So far, we're having a lot of problems here because Democrats want funding for state and local. The Republicans want the liability protections to protect the corporations in case you get sick under their establishment. And they're going back and forth, talking about talking, fighting about fighting. And here comes a third party. Bernie Sanders enters the fight saying that he's not going to sign on anything unless it includes the $1,200 stimulus checks. Meanwhile, the White House is looking for a compromise of $600 only. So now the fight is getting more complicated here. We were talking about liabilities and state and local, and now the $1,200 in, and this is a big giant mess. Reading the tape right now, I say no deal. They're not going to make a deal unless it is a Republican deal where the Democrats will have to forego the $1,200 checks and will have to agree on the liability issues. This will be a disappointing bill for the market. Moving on to market sentiment. What's going on here? Right away, you see what's been driving the market since the bottom, but specifically since November. The Robin Hoodiots. Because small options trades, when you compile them all together, they dwarf large trades, meaning that retail traders are driving the market via options gambling. And the big Wall Street firms and insiders are complicit. They're saying, wait a minute, if retail wants to push our stocks higher and higher, we're fine with that. We're not selling, we're not dumping. We're going to wait until we capture maximum value. Meanwhile, the retail trader is betting on a lottery ticket. These small trades in options, their calls, they're way out of the money. Traders are expecting wild shots, huge volatility. This is a recipe for disaster. Furthermore, here is the Citigroup panic euphoria model, and it is reaching pretty much all times highs, meaning that the market is in extreme euphoria. You don't need to be a genius to figure this one out. Everybody's bullish. Even perma bears turned perma bulls. You see the charts of the Qs, 10 straight days in the green. The IWM going to the upside like there is no tomorrow. Nobody wants to sell because everybody's now comfortable in the belief that stocks are not going to go down. It is impossible for stocks to go down at this point. There's more juice to the rally. Of course, everybody's not comfortable of selling because they sell today, the market goes up tomorrow, and they feel like a jackass and they feel the FOMO that they're leaving money on the table because this is how the psychology of gambling and greed works. Instead of being a savvy investor where you take your profits and you're satisfied with the profit level, you reach your target from the investment You hit the cha-ching button, that money is booked. It's in your pocket right now. Nobody can take that money away from you. You can wait in the sidelines, wait for the dip, for the correction, and you hop in again. The same playbook that happened back in September. But if you want to go to the moon, you're going to find yourself being forced to sell, because as impulsive, more impulsive this rally becomes, the harsher the correction, and it will happen out of the blue. Most likely a gap down in the pre-market. You're gonna wake up and you're gonna see your gains, a lot of them evaporating right away. And then everybody's gonna be forced to sell. They're gonna wake up that, oh, this is the time to take profits, and we see a big flush down. Why not take your profits right now when everything pretty much is trading on strength? And you don't have to take everything out of the table, but you could book some profits by trimming your position. That is what smart money is doing. Moreover, we heard from Peter Bukvar from Bleakley, and he says that the stock market is very, very vulnerable at these euphoric levels, and a timeout, quote unquote, is in order. Continuing, Peter warned that stocks are teetering at dangerous levels amid the kind of euphoria last seen during the bubble days of the dot-com boom. I made a video on Sunday showing you over 14 indicators, reliable historic indicators showing that we are in extreme bubble levels and a correction is imminent. Even Tesla witch Cathie Woods now realizes that we are due for a correction. Are the culties gonna listen? I don't think so.
There is one indicator that gives me pause. And while I do not believe we're in a bubble, sentiment indicators for the equity market in particular, so this would be the bull-bear ratios or the American, I don't know if it's AAII, American Academy of Individual Investors, that indicator is out to very high levels. And typically when it gets to very high positive readings, we are going to have a correction. Now, not always. As I mentioned, not a lot of other indicators seem to be in bubble territory, but I wouldn't be surprised to see some sort of correction after this seasonally strong period that we're in. That said, as I mentioned, I think we've got a long way to go in the equity market.
And here is another market expert who's saying, watch this signal to see if the rally can continue or not. Can you guess who this market expert is? Tom Lee from Neptune. Tom Lee issues his yearly prediction of a Santa rally every single year. He says this is going to be a Santa rally. We're now at December 8th and we're seeing a mini baby Santa rally. It's not there yet. And Tom Lee from Neptune is saying that if the dollar index pops higher, there is no Santa rally. So you got to watch for the dollar index. If it continues to flush down, we're going to see a Santa rally. If it doesn't, say goodbye to the Santa rally and hello to the Grinch. Even Tom Lee starting to sound a little nervous. Moving on to the heat map analysis, and let's see what happened today. Right away, you see mixed picture here, some definitive winners. However, we got losers too. Let's go through them, starting with the technology sector. Right away, you see that the big boxes of Microsoft, Apple, slight modest gains for the day. However, we see a little rebound in Intel, but the rest of the chips are taking a break. Nvidia remains the weakest name here. It's been muted, it's been doing nothing, and Nvidia down about 2% or so for the day. And what about this name? Splunk, the ticker SPLK. Options traders been betting and betting and betting that the name will rebound higher, and finally, here it is, up over 3% or so. Will the rebound continue? Who knows? We see weakness in Uber here. We discussed money coming out of Uber into DoorDash. We also see strength here in some of the software names: Shopify, Autodesk, ServiceNow. However, the losers in the software sector, Copa Software, down about 3% or so for the day. Moving on to communication services. The big boxes of Google and Facebook muted to the downside. Spotify catching a break from the rally, down over 2.5%. Video game names are gaining, specifically Activision Blizzard, up over 1.5% for the day. And here is a giant zombie name that is waking up from the dead, AT&T. We have seen the data from HBO Max, and I have seen an uptick in activities for the options market in AT&T, suggesting that this trade is about to heat up and get a lot hotter because investors are looking for the optimism in the HBO Max, the streaming platform for AT&T. Moving on to cyclicals. Slight gains for Amazon, Alibaba, Wayfair rebounding up over 3% for the day. Automotive gains for Tesla, Ferrari, Toyota, but we see Honda and General Motors trading in the red. The biggest gainer here is NIO, once again up over 3% or so. Casinos muted, cruises muted, with exception of Norwegian cruises. This is becoming a favorite for options gamblers. Norwegian cruises up over 6% for the day. Royal Caribbean just about 1% or so. Carnival cruises also 1.5% or so. You see Norwegian outperforming here due to the activities in the options market. What do we see in home builders? We heard from Toll Brothers yesterday. Toll Brothers down about 8% for the day, taking down all the home builders' names. The Lennar down, D.R. Horton down. We have a put options trade for D.R. Horton, and you see the name declining over 4% for the day. Moving on to defensives. What do we see here? Rebound for Kroger, 1% or so. Walmart, Costco, also gains of about 1%. But the loser here is Dollar Tree, down over 2%. And you see the run in tobacco, Philip Morris, another day, another gain of over 1%. What's going on with REITs? Muted action for REITs. Public storage is the notable loser here. Declines of over 1%. Moving on to utilities. The pain continues here. Duke Energy, American Waters, Dominion all down. The weakness in utilities is very notable. What about miners and basic materials? Muted action all across. Freeport McMoran muted, Valley muted, down about 0.5% or so. No notable activities here for the day. Moving on to energy. What's going on here? ExxonMobil winning the day over 3% gains. However, Chinese oil companies continue to slide lower. We see PetroChina down over 2%, and China Petroleum down over 4% for the day. Moving on to industrials. The winner of the day, Raytheon. We heard from the BlackRock administration, and they're appointing a former Raytheon board member who happens to be a former general, and you see the shares of Raytheon celebrating today up about 2% or so. We see strength back again in Emerson, the winner of the day, one of my favorite names, up over 2.5%. We see strength in FedEx, up about 1.5% for the day. Moving on to the winner of the day, healthcare. What's going on here? Pfizer closing up over 3%. Johnson & Johnson almost 2%, and we're waiting for the vaccine news from Johnson & Johnson. Moderna, similar story, up over 6.5%. All in all, strong day for healthcare. What about financials? Muted action. Nothing is going on here with financials. Big banks are muted. Credit cards are muted. The big trading firms, Goldman Sachs, Morgan Stanley, Schwab, all muted for the day. Regional banks slightly in the red. Moving on to the rotation trade. What's going on here? No general theme for the day. Mixed picture. Again, we are in a very low volume day. Institutions stop pumping money into the market, and now it becomes a picker's market where retail picks winners and losers, and you see mixed picture for the rotation trade. We're not seeing a definitive rotation of the rotation from the IWM and the reopening names into technology, at least not yet. So far, it is wait and see, low volume, slowly grind upward every single day. And again, it becomes a market that moves via options. Names that are catching a bid in the options market move higher. Names that are abandoned, for example, NVIDIA, you see it sliding lower. Moving on to the charts analysis, what do we have here? Another green day for the SPY. Started a little lower from yesterday. However, buy the dip crowd pushes the market higher once again. Very, very extreme low volume, way lower than average. With low volume, the path of least resistance is upward. We continue to march higher and higher until there is a catalyst that would trigger algos to sell. What is the catalyst? Could be a collapse of the stimulus talks, could be a rise in the US dollar, could be a black swan event, but you see why the market continues to grind higher. There is no factor that is forcing selling right now. Everybody's comfortable. Matter of fact, a lot of traders and investors are not even watching the stock market anymore. They're very comfortable that the market's going to continue to grind higher every day because there is no bad news. Where are the bad news that will force the selling? Of course, usually that happens out of the blue. Please go back in the charts and study what the market did back in August of this year and January 2018. We are in similar territories right now. The correction comes out of the blue and everybody asks why, and they try to pin a reason for it. Back in 2018, after the massive run in January, we had one of the biggest declines in history, and they tried to pin it on the jobs report and the increase in wages and the rise in treasury yields, etc., etc. They're trying to play the guess game. What actually happened back then is that all of the indicators that I showed you on Sunday and more were flashing red, hot, warning signals. It was a technical breakdown of the market, and I bet that we're going to see another technical breakdown here, specifically in the IWM. Speaking of the devil, let's take a look at it. The IWM, daily perspective, trading very hot in the RSI, very hot in the MACD, grinding higher and higher on very low volume, and we're starting to see bearish bets. You saw one in the options market today, betting on a decline for the IWM. Again, the reason could be just technical breakdown. The algos are also programmed to react to technicals and indicators. Just an FYI. And here's a chart of the cues. What's new? Nothing new. We're grinding higher. Day number 10 to the green. No stopping sign. No resistance whatsoever. No selling pressure whatsoever. The path of least resistance is higher. And check out the volume. Very low volume. Extremely low volume. As if everybody on Wall Street waved goodbye and went on their way, assuming they're going to see a Santa rally automatically. And then they're going to wake up next year to decide what they want to do. What is my hunch feeling? They will be forced back in the market because we're going to see a decline out of the blue, a correction out of the blue due to a technical breakdown. Now the dollar could force it if we see a short squeeze in the dollar and you're starting to see the dollar curling upward. That could do it. Not just according to me, but according to your favorite Tom Lee. And speaking of the dollar index, let's take a look. You see it closing in the green for the first time in 5 days. RSI curling upward, MACD curling upward. We know the historic short interest in the US dollar right now. All you need is a piece of news about the stimulus talks falling apart or bad news about Brexit, and you will see a short squeeze in the US dollar. That will put a lot of pressure on the indices. Moving on to gold. And this is why today I started trimming some of my profits in gold, because I'm seeing a curl upward in the dollar index and we are facing a mini level of resistance of 1870. So I'm taking a little bit of chips off the table. If gold continues to run hot, the target is 1925 for the final exit. Moving on to the VIX, what do we see here? A red day for the VIX, popping higher yesterday, reversing all the gains today. Very low volatility, low volume. You know the deal. When you see the VIX acting like this, it is the opportunity for you to start to buy protection. I keep getting these messages from people pissed off saying, oh, you're bearish, you're saying sell your stocks and the stock market keeps going up. If you don't want to take your profits, it's very simple. Buy protection. Buy put options. In case there is a flush to the downside out of the blue, you are protected. They're extremely cheap. Why would you not buy protection? You are exposed naked to the downside. And you see all of the indicators I showed you saying we are very close for a correction here, perhaps a steep one. Insurance is very cheap. Take advantage. Moving on to yields. We see a tick downward here for yields. However, closing above 0.90%, which suggests that we could march higher to the magnet level of 1% until and unless the TNX yields close below the breakup candle. You see that big green candle closing below it will mean we're not going to 1%. What would trigger such event? A fallout in the stimulus talks. I just covered the news for you. There's a big fight going on here. You gotta please McConnell, you gotta please Nancy, and now you gotta please Bernie too. Everybody has demands, and it's becoming very complicated, and pretty much the probabilities for stimulus is dwindling by the day. Remember, they only got 1 week to do this deal. Tick tock. Moving on to bonds. What's going on with the TLT? The TLT gapping higher. This is a 15 minutes perspective. You see the TNX going downward, TLT higher, and again, waiting, anticipating the outcome of the stimulus talks. What's going on with Apple? 15 minutes perspective. Remember, a few days ago we talked about 125 as a level of resistance. What happened today? Apple climbing higher all the way to 125, facing resistance, closing below the resistance line. Not a definitive rejection yet, but we have to see what happens tomorrow with Apple. Is it going to give it another crack to challenge the 125 resistance and continue to march higher? Or is this it for the Apple rally that started last week? Moving on to Tesla. Any update here? Another green day. You see the formulation of the C leg. We had the ABC leg. Here comes the C leg. There is still room to go higher until we reach the RSI level of 84. You got to understand the psychology here. Yes, we had bad news today for Tesla, issuing more shares, which means that they're diluting the value of the stock. In ordinary times, you would sell based on this news, but we are in 2020. We're in the mania, the Robin Hood era. Good news is good news. Bad news is good news. Worse news is even better news. They're buying Tesla on mere psychology. They're assuming that until the inclusion of the S&P 500, which will happen December 21st, you gotta buy because somebody has to buy the shares from your hand at more expensive prices once Tesla is included in the S&P 500. And by the way, there is a validity to this theory and this kind of thinking. The problem is, and this could be a massive bomb right here, if they continue to push Tesla higher and higher, and say by December 21st, we're looking at Tesla trading at 800, 900, extreme valuation, that would be a massive bomb in the stock market. We could see a sell-off in Tesla that will take down the entire S&P 500 with it. Extremely dangerous situation. I don't know what the folks at the S&P 500 were thinking when they decided to include Tesla right now, knowing the current psychology of market participants right now. And here we go. Let's move on to evaluate the XRT, the retail ETF. It is very extended. I started buying put options on the XRT. So let's evaluate whether we should fade the XRT or not. Looking at the ATF itself, we see a curl down in the MACD, very extended. We see weakness in the momentum here, about to cross down the blue line average, creating red impressions in the histogram. Similar story in the RSI, very elevated, almost trading at 80, but you gotta break it down to the components to see whether the XRT is a sell or is it too early. So let's look at the most important components. And I will look at the bad first, then the good, and we'll make up a conclusion here. Starting with GameStop. Remember, I did not enter this trade, but I told you the $17 is the entry price to short GameStop. GameStop tried over and over and over again to break above the 17 resistance line. After the harsh rejection, you see the red candle going down, closing below 17. Since then, the name been trying to crack above this level, forming what is known as a bear flag. What do we have after the bell? We have earnings from GameStop. Last time I checked, the name is trading significantly lower. You see the extended level in the MACD curling downward, ready to close the blue line average, creating red impressions in the histogram. So you're starting to see the signs for the reversal in GameStop. GameStop is one of the biggest holdings in the XRT, and it will certainly have a negative effect on the ETF. Furthermore, here's another big name in the XRT, KSS Kohl's Stores. Similar story, huge extension since November. Everybody bought the name on Thanksgiving's optimism, on holidays spending optimism, whatever you want to name it. The name is very extended, creating a series of gaps, very technically unhealthy. You combine that with the elevated levels of the RSI and the curling down in the MACD, it is a no-brainer. Today we saw a reverse hammer formation indicating that Kohl's Stores is a short and it will take a toll on the overall ETF XRT. Here is another big one, perhaps the largest component of the XRT, the ticker MGNI, magnet, and you see it reaching my resistance level of 22, curling downward in the MACD and actually making a cross, a successful one to the negative side, creating red impression in the histogram and curling down from the very elevated levels of the RSI. If you have Bollinger Bands on your charts, I don't use them, but if you have them, it is way extended. So now you see a reversal here, taking a break. It is likely to go down to revisit the 20 days moving average. Another piece of the puzzle suggesting a shift downward in the XRT. And here's another one for Macy's. You see the range that Macy's has been trading around. 2 days in a row now, we peaked above the upper limit of the range. We failed, closing below the upper limit of the range. Another day of close below the range tomorrow, and that will be a technical reversal. Right away, you don't have to be a genius to figure it out. Take a look at the MACD, ready to cross to the negative territory. Similar story with the RSI, very elevated at the level of 81. And that is my line in the sand to short Macy's, and I'm expecting the name to trade lower. Another piece of the puzzle that suggests weakness for the XRT. And now that we reviewed the weak, let's review the strong in the XRT. These names have been driving the XRT to the stratosphere, very elevated levels, single-handed. So let's take a look at these names. Number 1, Carvana. Carvana's trading in a range. You see, it is very definitive range, and now we are at the upper limit of the range. If we see a rejection tomorrow and a turn downward, that is another piece supporting the move to fade out the XRT. However, breaking above the upper limit of the range suggests strength in Carvana. That would be a balancing effect for the weakness in GameStop, Macy's, etc. Here's another strong one, Etsy. Right away, you see the wedge consolidation here, breaking above the wedge. That is a very bullish signal, and you see Etsy rallying. There is still a lot of room for Etsy to run higher before it becomes overbought and ready for a reversal. Moving on to the strongest name in the XRT today, Stitch Fix. Stitch Fix reported earnings yesterday, and they were very decent. $400 million, over $400 million for the quarter. We're talking about a company that was valued a little over $3 billion yesterday. Today, adding another $1.5 billion to the valuation because the name rallied about 50% at the highs of the day. Again, I did not catch this one, but I hope some of you did and bought Stitch Fix. It was very undervalued when you compare it with other garbage names in the XRT. What's going to happen after a massive run like this? We are likely to see a slight move downward, profit taking. However, we're going to start to see the gamma squeeze taking effect and Stitch Fix being bought again, marching higher. So I presented to you the weaker names in the XRT and the strong names of the XRT. The weighting is in favor of the weaker names because GameStop, Macy's, Kohl's have larger weighting in the XRT than Etsy, Carvana, and Stitch Fix. The conclusion is the XRT is starting to show weakness, but you gotta watch the charts of Etsy, Carvana, perhaps Target too. Stitch Fix is still a small name in the XRT, but I'll be watching Carvana and Etsy. If we start to see a reversal and weakness along with Macy's, GameStop, Kohl's, Nordstrom, then you're going to have your conclusion that the XRT and the retail sector is ready to correct from the massive rally it's been on. And now let's move on to conclude this video by answering viewers' questions. And here is the first question saying that I am an overseas investor in the US market. Would you suggest that now would be a good time for me to sell all of my long positions since the US dollar is rapidly depreciating when you compare it to my local currency? The short answer is no, because here's what happens when the US dollar depreciates. And of course, this is the long-term outlook. Remember, we could see a short covering rally in the US dollar short term, but the long-term outlook is negative for the US dollar. This has been my outlook since the summer, and this is why I've been suggesting for my followers to buy copper names, miners, giant industrials, multinational corporations, because this is what happens when the US dollar decreases in value. It favors U.S. exporters. Why is that? Take a look at giant industrials such as Boeing, General Motors, Caterpillar, etc. When the dollar is cheap compared to your local currency, it is encouraging to your importers in Australia, England, whatever country you're in, to import more US-made goods. So the weaker US dollar goes in favor of giant industrials and US exporters. You gotta pay attention here. The weaker US dollar would affect certain names negatively, guaranteed. However, certain names will benefit from the decline. So you have to look at the heat map. Which sectors are going to benefit from a weaker US dollar. Number one, industrials, giant exporters from the US. Number two, metals, materials, copper, gold, iron, nickel. They're all going to benefit from a weaker US dollar because they're traded in US dollar. Similar story with oil and gas and some of the consumer defensives, the massive international corporations such as Coca-Cola, Mondelez, and this is why since the summer I've been investing in very boring names. Coca-Cola, Mondelez, International Paper, General Motors. This is the most boring portfolio I had because I am betting on a weaker US dollar. Now, why would Coca-Cola, Mondelez, all of these big multinational companies benefit from a weaker dollar? Let's take, for example, Mondelez. They have a lot of their profits and revenue coming from Europe, South America, Asia, Middle East. When these currencies appreciate against the US dollar, the conversion rate is in favor of Mondelez. Their margins improve. Meanwhile, you see companies that import from overseas, US-based companies that import goods from overseas. These are the names that are going to suffer under a weaker dollar. What are we talking about? Walmart, Home Depot, Target. You can argue some of the tech names, specifically in the semiconductor industry, companies that import screens and laptops from China, these are going to suffer due to the weaker US dollar. So again, it becomes a picker's game here when we talk about a weaker US dollar. And by the way, it has the same effect for companies in your country, meaning that companies that operate in your country, that import a lot of goods from America, these are the stocks and the companies you want to invest in because they will buy US goods with the cheaper dollar and then sell it in your country with the local currency that is stronger than the US dollar. The exchange rate becomes in favor of these companies. What companies in your local market that are going to suffer from a weaker dollar? Companies that do a lot of business in the US. For example, let's say that you have a local company and 40% of the revenue for that particular company come from the US. That is a company you want to sell because it's going to suffer. Why? The revenue that they make in the US, they'll have to transfer that money back to the home country, and the exchange rate from a weaker dollar to a stronger local currency will work against these companies. Their margins will shrink due to the currency exchange effect. So in summary, in a weaker US dollar, you want to buy giant industrial US exporters. You want to buy American companies that are multinational, that make a lot of revenue from overseas. You also want to consider materials and oil and gas. What you want to fade are companies based in the United States that import a lot of goods from overseas. Now, the flip side, in your country, you want to buy the companies that import a lot of goods made in the US, and you want to sell the companies that make a huge chunk of the revenue from the United States. I hope this is clear. If it's not, let me know. I'll explain further to you in the comments. That's all I got for you today, and I'll talk to you again tomorrow. If you found the information presented in this video helpful, please subscribe, press the like button, the notification button, and follow me on social media.